Right now, the market is in a really weird place. You got AI stocks that continue to push higher. You got fintech stocks that are getting hit with short reports, oil companies that are quietly printing money, and defense and space is heating up pretty fast. So, if you had fresh capital today, where would you be putting that money? Because in this video, I'm going to be giving you 5 stocks I'd personally be watching right now. And I'm not just going to be giving you the names of the companies. No, I'm going to be breaking down the financials, the news, and the real risks associated with these companies. Because some of these are high upside and some of these are way safer than people think. So, if you enjoy my content, please hit the like and subscribe button. And if you want help, making better decisions with your investing, check out the first link in the description below and join my community, which is free of charge. And again, please support yourself with like-minded investors like me and you to help better your trading and investing experience. Now, let's start with the one most interesting AI plays right now. First up, Applied Digital. And this is one of the stocks where the story is way bigger than the current financials. APLD basically builds the infrastructure of artificial intelligence. We're talking data centers, power, cooling, and high performance computing. They're like the landlord for AI companies. Now, Applied Digital specifically, as you do see here, Claude on Prophecy does have bullish 1-year projections, projecting it to reach the $39.30 price level. And right now, they're currently trading at $32.42. Financially, though, when we take a look at the 10K for the fiscal year of 2025, we do see here that revenue was at $144 million, which is growth, slight growth, not significant growth, but still growing year over year, 5.5%. Gross margin was at about 29%. Operating loss about $16 million. Cash, total cash that they have at the moment is $41 million, and their liabilities are high compared to their assets. So clearly, this is not a mature company yet. But here's why people are paying attention to the stock. They have over $16 billion in backlog. They just raised over $2 billion to expand, and they're working with companies connected to NVIDIA and CoreWeave. So the real bet here is pretty simple when you look at it. If AI demands continue to keep on exploding, these data centers can become extremely valuable. But don't ignore the reality. Please, I'm begging you, don't ignore the reality, because you always have to take risk into consideration. Again, this is one of the stocks I'm going to be covering, but what do I always talk about in each one of my videos? Do not marry a stock. You want to be as unbiased whenever you are looking to press the buy button, hold a stock, or avoid a stock and not press the buy button. Whatever your decision is, you want to be as unbiased as possible. So you have to understand that there is insider sell. Certain risks that apply are insider selling, customer concentration risk, and it's very capital intensive. So this is not a safe play. This is a high risk, high reward artificial intelligence infrastructure bet. Now, APLD is one of those stocks where if they execute, it could run hard, but if they don't, it can fall just as fast. So when we talk about APLD, those are the risks and the reward, and that's the play when it comes to APLD. So let's switch things off, and now let's switch things from a high-risk AI to a company dealing with a ton of attention right now. And that company actually is reporting earnings quite soon, and that one is none other than SOFI. SOFI is probably one of the most interesting setups right now because you've got fear and growth all at the same time. The current situation on SOFI right now is you got a short report that was reported by Muddy Waters, big media attention, and as I mentioned again, the earnings report is coming on April 29th. So this is one of the moments where sentiment can flip very fast. SOFI is basically trying to replace your bank entirely. You can borrow money, you can save money, and you can invest money all in one app. So it's not just like Robinhood, it's trying to be your entire financial system. And speaking of financials, when we talk about the financials of SoFi reflecting the 10K fiscal year 2025 annual report, you do see revenue was at $3.6 billion. Growth is at 35% year over year. Gross margin is 83%. And their cash on hand is at $5.3 billion. And here's the key, they've been moving towards profitability while growing very fast, and they do not disappoint when it comes to their quarterly reports. Each quarter over quarter over quarter over quarter, revenue continues to keep scaling, and they have become more and more profitable as time has gone on. So this does show that this is a working business model right now. So the bull case for the stock, when we talk about it, is they've got massive member growth, a full ecosystem, and strong revenue expansion. So if they hit and it's not a miss, if it actually hits, this could squeeze and move quick. Again, the risks that are at play, there's short selling pressure, loan exposure, market sentiment. So this is a high attention stock right now. And there are usually the ones that move the most. Quick question for you. Which one of the stocks would you buy right now? Comment below as I actually read every single comment that does come my way. Now let's get into one of the more exciting sectors, because the space stocks are a big talk right now on social media. So let's cover none other than Rocket Lab. And let's actually take a quick look also at what the projections for Rocket Lab would be in the upcoming year. As we do see here, Rocket Lab, again, thank you, Claude, for running the background for me, but they do have very bullish expectations. Currently, the stock is trading at $90.04. They have grown significantly ever since the first time I ever saw the stock about a year ago, when it was in the 30-something dollar range. And actually, I think it was even more. It was probably, let me check here, guys. The stock, when I first not covered it, but when I first heard of it, was about a year ago. And currently it's April 22nd. So we were in the 17 to 20 something dollar range. So it's grown exponentially. The share price of the stock has exploded to the roof, gone up to the moon. And the 1 year projection for the stock at the moment is at $109.27. So this is one of the cleanest space plays on the market right now. And the financials for it, the stock is, the revenue is currently at $601 million. Growth is at 38% year over year, and gross margin is at 34%. And the cash that they have at the moment is at $828 million. So that shows strong growth, solid margins for this type of company. And certain news that came out not too long ago is they just secured a $190 million contract for 20 launches. Now, why would this matter? This matters because this isn't hype anymore. This is real demand. And the big picture of all of this is Rocket Lab is building a full-on ecosystem with launches, satellites, and space systems. So instead of just one revenue stream, they're stacking multiple. The risk with this stock is it's still not fully profitable, and the space industry is very competitive. But this is one of those long-term growth stories where execution could equal huge upside. So now let's completely shift gears and go on to something that has been a big discussion lately in the stock market due to all of the crisis around the world. And we're going to be talking about something none other than oil. And the specific stock that we're going to be covering is none other than Exxon. So this is actually one of the only stocks, as we do see here, that Claude does have bearish projections over a 1 year period. Currently, that's what it has it at. And right now, from a price action perspective, it closed the day at $149.50. So this is the complete opposite of another company like APLD. In certain news relating to Exxon is they're moving to Texas. They got strong buybacks. The Guyana oil expansion is something that has been recently covered in the news, And recently they are up strong, which is also probably one of the reasons why Claude does have bearish expectations over the next 1 year projection. Not significantly bearish expectations, but just slightly. As we do see here, oh, actually no, sorry, it adjusted over the next year period. It does have bullish expectations at $164.44. Sorry, I guess it just took a little bit of time to calibrate, but nevertheless, they are up little more lately course of this over the course of this year, 2026. They've gone as low as $118 and as high as $176.41, and they're in the middle range of that, a little bit more in the upper thirds of that range at $149.50 as of today's market close. So from the financial perspective of the stock, their revenue is at $332 billion. It's a big boy. They generate a lot of revenue year over year. Oil is a big deal, as we all know. Their operating income is at $41 billion, and they have massive cash flow, as you can already guess for a big giant company like Exxon. So the company is printing money, and why this matters is that if oil prices stay strong, Exxon continues to generate insane cash flow plus dividends. This is your stability play, because the risk that we are going to cover when it comes to the stock is if the oil price with the oil price fluctuations and the macroeconomic environment, that can bring a little more danger to the stock, and it could turn it from a stability play to something that could cause more panic. But compared to everything else on this list, this is one of the more safer plays in the market. And well, in this video that I'm going to be covering about the market. And finally, let's talk about another hot sector, another hot market that is none other than defense. And I've talked a lot about Castellum CTM. I've talked decently about Big Bear AI, but we're going to talk about a different one this time. One that is larger cap than those two, and that is none other than Leidos. Now, currently, Leidos is trading at as of today's market close, is trading at $150.71. And Claude, let's actually give it some time to calibrate. So right now, let's just give it a second, guys. But it's probably I do assume it's gonna be bullish, most likely, because with everything going on with the macro of the stock market right now, and how everything has shot down lately because of all the distress and the news about the war and what everyone else knows, this upcoming year and year and a half could be very big for the stock market, and it could have been the time that we buy in when there's blood in the market and there's more panic, and then we do see profits later on. I do anticipate something like that would happen. Here, let's talk a little more about the company while we let that calibrate. But this is a company that most people could be overlooking right now. And to finish off on that, guys, their 1 year projection as of Claude, what Claude states on prophecy is $175.65, which is 16.5% growth year over year, which, that is a pretty decent price swing from where we're trading at now at $150.71, and maybe we can make it back to the all-time highs. So what the company actually does, they help the government run cybersecurity, data systems, and military technology. Think of it like this: the backbone of government tech. They're the backbone of government tech operations. So let's go back to the financials of this company now, because we talked about the financials of the other ones. Revenues at $17.1 billion, $17.1 billion. Growth very almost stagnant and very slightly up. It's only up 3%. And their operating income is at $2.1 billion. So it's not explosive growth, but very stable. So the price target cut, but still, the price target was cut, but they still have it as a buy according to different analysts. They have new joint ventures, and there's a strong demand for defense, as we do know. It's a very hyped sector right now. So the big picture is that defense spending is going up. We all know about that. The big, beautiful bill, the big thing that Big Daddy Trump was talking about, announced a few months ago. And we all do know why defense is going to become an increasingly, is going to become a industry that continues to get funded at a high rate that it is right now. It's going to keep getting funded as time goes on. And companies like this are going to benefit directly. The risks that comes with Leidos is it could have slower growth, and there have been reports of some insider selling, which, as we all know, retail and investors, even institutionals, can view that as a lack of confidence within the company, and that does create a little bit of controversy and a little bit of um not discernment, but divergence, I believe is the proper term. But yeah, because they're not going congruent, they're divergent to each other. So they're going against what they believe in the company. So it's kind of like people on the inside of the company thinking, I don't know if I truly believe in the long term play of this company. So I don't know if I want to have my money in it. People like to see conviction among the people on the payroll, on the board of directors, in the company that they are selling or investing in. So this is in my opinion, this is a long-term steady compounder type of stock. So if I had fresh capital today, if I was you and you had fresh capital today, APLD would equal a high risk AI play. SOFI is growth plus a sentiment shift, you know, in the positive light, in a positive direction, of course. Rocket Lab is space expansion. If you want to get yourself invested and put a portion of your portfolio into that market. Exxon, cash flow plus stability. And Leidos is defense plus long-term contracts, and a industry that is going to continue to get heavily funded. So the real question is, what kind of investor are you? I gave you all the names of these stocks, but you got to make the decision with your portfolio that matches your risk tolerance and your thesis. Because if each of these stocks fit a completely different strategy, each of these stocks do fit a complete different strategy. Now, you might be more you might have more of a higher appetite for risk, and you might be a little more of a hands-off investor. You might be more of a day trader, swing trader. You might look for stocks that have dividends. You might be a person that likes to invest in penny stocks, or you could do something that does all different things, and you like to have riskier plays, safer plays, and diversify depending on what your goals are. All of them could be good for you, but it all depends on what it is: your goals, your risk tolerance, your risk management, your thesis, and your psychology. All of those play into consideration when looking for stocks that you want to get involved with. So if you enjoyed the video, please hit the like and subscribe button. Comment below as I respond to every comment in the comment sections. And please check out the first link in the description to my free InvestQ community and support yourself with like-minded investors. I'll see you all in the next video. InvestQ out. Keep making good decisions with your portfolio, and you take it easy, guys.